I want to bring in Charles Schwab and Company, their chief investment strategist, Ann Sonders. And Ann, the stock market's been sort of churning, spinning its wheels after that stumble in April. It feels like it's waiting for something else, something else maybe to confirm 2 or 3 rate cuts to get it back in gear. Your thoughts?
Yeah, I think it's been a moving target and a bit of a parlor game in terms of when will the Fed start cutting, by how much. But, the Fed is data dependent. So everybody that's a market watcher or a Fed watcher is at the mercy of the incoming data. And it's not just the inflation data, but the combination with the labor market data. And there have been fits and starts. I really think, though, what's been the primary driver of equities directionally has been the move in bond yields,
Right.
not so much expectations around Fed policy. And if you just look at the 10-year, there's been that very close inverse relationship between what it's been doing since last summer and what equities have been doing. So I think it should be the area of focus in the near term for the equity market is the bond market.
And of course, well, the bond market, though, is always more reasonable, I guess, is the way, it's always
Yeah.
right. So, and the bond market, more rational, of course. And then, listen, we hit 4.7 on the 10-year. We pulled back a little bit. Is there a number, though? I've been reading some folks saying like 4.3%. Below there could be something of a buy signal for stocks.
It's hard to make a judgment as to the technical level of the 10-year. Admittedly, there is money that is more speculative in nature that might trade off technicals on the bond market side of things in terms of treasury yields. I'm not going to venture a guess there. I think, what 4.7 brought about and the speed it got there was concerns about yields heading back up toward that 5% level, which is where they peaked out at the end of October. And as we remember, the move from sub 4 to 5 from late July to late October brought with it a 10% correction in the S&P, a little bit more in the case of the NASDAQ. So I think it's that fear directionally that triggered some of the churn and weakness. And a bit of a pulling back, I think, has calmed some fears. But as to whether there's some precise level that is going to initiate buying, just the retreat off of 4.7 to sub 4.5 has been enough, in part, to give the market a lift as we're seeing today.
Over the weekend, we learned that Berkshire Hathaway, they've got $189 billion. There was a time they hardly had any cash. It's just gone nuts. It'd be $200 billion probably by the time we finish this conversation. Warren Buffett's sort of lamenting the lack of opportunities out there to put his money to work. And I want to ask you about this because I've got another chart here I want to share with the audience, and these are recommended allocations to cash over the years, going back to 2006. It's come down significantly. And so you've got strategists who are saying, hey, cash is trash, put your money to work. And then on the other hand, Warren Buffett, in a different circumstance, obviously, having difficulty finding ways to use $189 billion. Your thoughts?
Well, I think it was the right caveat there to look at Warren Buffett and what he's doing with the behemoth that is Berkshire Hathaway, looking for opportunities for value in an environment where valuations and multiples are fairly rich is not a surprise. But to liken that to, say, what individual investors should do is just the ultimate in apples to oranges comparison. Right. I think for individual investors, the amount to have in cash is very personal. We have to think, especially given that chart you showed goes back to 2006, from the 08 period forward until this recent move up off the zero bound. So much of that time was in an environment where you got little to nothing in terms of yield. So for the more risk intolerant investor that's living on income, to be able to actually get some fixed income, the safe fixed income side of things like treasuries, makes a lot of sense. For some investors, having a large cash allocation, if their desire and their goal is to grow the principal, may not make a lot of sense. But I wouldn't do that comp to any message coming from Buffett and Berkshire Hathaway and translating that to what individual investors should do.
Ann, before I let you go, the title of your piece last week was Life is Good, and it's something to the effect it's even great for large cap names. I would add to that, it's even amazing. It's like Gatsby-like for the large cap, mega cap tech names. And here we are again today. Look at the number one percentage gainer, Supermicro, right? Then you've got Micron, and then you've got AMD, Advanced Micro, then you've got NVIDIA. The thing is, it feels like when it's time to go into a foxhole for the last month, utilities and staples have been the only sectors up. But whenever the market wants to get in gear, it's the same handful of names that leads the way. And for investors who aren't in these, it feels like you've got to be in them.
Well, you have to be careful about not letting the concentration in your portfolio start to mirror what has been the concentration in indexes like the S&P and the Nasdaq. That doesn't mean you don't hold them. You just be mindful of using rebalancing. The one thing that's unique about this period of tech and tech related large cap dominance versus say the late 1990s is that the fundamentals underlying many of these stocks, these are cash rich companies that in many cases are earning more interest on their cash and they're paying interest on debt. That's in stark contrast to many smaller
Hmm.
cap zombie type companies. And I think that there's sort of a fundamental case that can be made, but there's still the important discipline of rebalancing to make sure as you get these big moves up, you consider trimming some positions. That's not all in, all out, sell everything, buy everything, but trimming and let rebalancing be the discipline that keeps your own portfolio from getting as concentrated as some of these index get when you're in that upswing in some of these small handful of names.
All right, the operative word there is discipline. And believe me, folks, when
Yep.
they move the other way, you'll be glad you listened to Liz Ann. Thanks a lot. Appreciate it.
Thanks, Charlie.